Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 26, 2016. Finally, we're seeing some signs of weakness in the stock market, so there could be a correction coming. But I think the market is generally speaking very bullish, so this should be viewed as a buying opportunities for equities. Utilities are extending their correction, and we'll look at the support level for XLU. Bonds really ended the week on an ugly candle, and is it possible that the interest rates have finally, going to start going up now? We'll look at the dollar and the forex universe. Gold is under pressure from the strong dollar. We'll look at oil, natural gas. Oil may have rolled over, and then finally we'll finish off with XLE, which is, I think, still in a bear market. So first of all, I want to point out that this coming Tuesday there is a consumer confidence index report on this Tuesday, August 30th. This is a relatively important event and may affect the stock market in a in a strong enough manner to warrant paying attention to. And of course, Friday, this September 2nd, U.S. unemployment report is at 8:30 in the morning. This one is certainly going to be important for many asset classes, probably most asset classes. Right, so this is S&P 500 ETF SPY. I think this is a bullish chart. I think these are all-time highs, obviously, so this is a bullish chart, but we are seeing a possible pressure to the downside, especially on Friday. This candle looked much worse even like 15 minutes before the close, where the close was, it was much more red before the close, but then at the very last few minutes, the prices the bulls pushed the prices slightly higher. So it was actually going to finish somewhere around 216 or so. So again, I think we're seeing some pressure to the downside, and this is normal behavior, because it looks like we broke out above all-time highs. So this is overextended, I think, in my opinion. And this is about what is it, 10.5% move just off the Brexit low. So a pullback would not be out of the ordinary, and I think it will be a healthy thing. And I think the obvious support level, of course, is around 211, 212 here. First support, of course, is around maybe 50-day moving average, but I think a deeper correction is in order, and I think we're going to see at least a pullback to around 212. Now, possibly we're going to retrace all the way back to the Brexit lows, but I think at that point it will be a hell of a buying opportunity. Again, I think this is a bullish chart. So pretty much any pullback should be viewed as a buying opportunity. This is another one of the indicators I follow. This is a breadth momentum oscillator. This is just an oscillator of the advanced decline line. Kind of useful. So notice that we haven't been in a negative territory since basically February. So I think time has come to go into negative territory for the breadth momentum oscillator. This is a little bit longer term time frame, but it's really a similar picture. These are all-time highs, so a pullback is normal. This is the actual underlying index for S&P 500. As far as the short-term oscillators, this is a percentage of stocks above 20-day moving average. So looks like we're going to be dropping into the, maybe around 20% or so. And again, it was a similar thing before. Basically, if you want to look for buying opportunities in an uptrend, you need to look for oversold conditions, and this could be one of them, where percentage of stocks above the 20-day exponential moving average is, around 20 or less or so. But longer term, I think this is a fully bullish security, and we are fully, I think, in a bull market. So I think once we're done with this correction, I think we're going to see fresh all-time highs. This is S&P 500 on a weekly time frame. Just for illustration, I'm showing that we broke out to all-time highs, and if we pull back to around 21.25, this is around 21.25, so it makes perfect sense to retest this breakout. Again, this is not an exact science, so we could see a deeper pullback, and it's pretty much anybody's guess how deep of the pullback we will get. You know, you could do like Fibonacci retracements, but you know, those are pretty much anybody's guess. So you can say, oh, maybe it will be from, you know, this level to this level. There we go. So, you know, we could see maybe it will retrace to here or here or here, but it's pretty much anybody's guess where this retracement will take place. So anyway, so a retrace to at least 21.25 makes perfect sense as a security retests this breakout. Here is my proprietary market breadth index in the upper part here. We entered the bear market according to this system back in September 2015. We meandered in the bear market, and finally we went into a bullish phase again here in May, according to my system here. And these are all-time highs. Now, one of the inputs for the market breadth index is called raw. I call it raw MBI, and there is a lot of inputs that go into MBI. I think I want to say there is at least 60 or so inputs. So this represents just one of them, and I wanted to show that actually with all of this, you know, negative and downward pressure here for the past few days, raw MBI actually went up from 81 to 85. So that is showing quite a bit of resilience and in the market breadth part of the stock markets. In other words, market breadth is still quite bullish, and I think any pullback should be viewed as a buying opportunity. One of the sectors that's been under pressure is utilities. So these are all-time highs. So I think this is pretty much a, you know, clearly a bullish chart. You know, we have the 50-day moving average, 200-day moving average, all-time high. So a pullback is normal. A pullback to test the breakout levels. This is a gap right there. So this is a breakout to all-time highs above these two previous peaks. So it's absolutely normal for it to pull back and test the breakout. Again, this is XLU utilities are a little bit, not a lot, but a little bit more interest rate sensitive than the rest of the stock market. So you know, since the bonds are going to be or are under pressure from positive GDP report and also from Janet Yellen's remarks, it does make sense that utilities are correcting deeper than the rest of the market. So clear support is around 46. We have several things that are happening there around 46, 80, 46, 80, 46, 35 here. We have several things happening here. For example, the 200-day moving average and these two bottoms here. Also, there is this peak here with a breakout above it. So there's a lot of things that are happening in that area. Whether or not the support will be found there is a completely different story. Now, it is possible, however, unlikely that we're going to just see, you know, this security completely unravel into the bear market. I think usually securities kind of go back and forth, and before they completely unravel, there is a lot of back and forth. So I think the support first needs to be tested before we say, okay, this is now a bearish security. I don't think this is a bearish security. I think a pullback again should be viewed as a buying opportunity for utilities. And then when we look at bonds, we're seeing somewhat of a similar picture. Okay, this is TLT, the Treasury bond, long Treasuries fund. So all-time highs here, following the breakout above these peaks here, all-time highs, and now we're correcting possibly in a like a triangle. Now I drew in this trend line a couple of weeks ago, and actually on the closing basis it has not been violated to the upside, so looks like this trend line is being respected, so to speak. So right now TLT fell below the 50-day moving average, and this candle is actually quite nasty and ugly looking. So it is a combination of a shooting star coupled together with a almost like a bearish engulfing of this candle being engulfed by the Friday's candle, and also there is a lot of selling pressure because prices ended up next to the low of the day. Additionally, this was on high volume, so there's a lot of negative factors that are affecting this particular security, TLT. So I think we are going to be again retesting this breakout. So we have one breakout and then another breakout right there with an enormous gap here. So this gap has not been fully closed yet because there is a little bit of a gap remaining right there. So it would make sense for TLT to come back and attempt to close this gap. There's another very large gap right there. So again, I wouldn't be surprised if this gap gets closed. So depending on what happens on Monday, because Janet Yellen also spoke today, so we'll see what the reaction is to her speech on Monday. Maybe we'll see another strong pressure down, or could be something completely different. Yeah, this is the same chart, TLT, but in a weekly time frame going back a few years. Again, this is a bullish chart because we are close to all-time highs and with a breakout, and this is possibly a triangle consolidation, and if we get a breakout, that would call for fresh all-time highs, like maybe a breakout above the trend line that I just showed. Alternative scenario again is we come back and retest, we close this gap and retest this breakout around 134, 130, around $134. This is a diversified fund, aggregate bond fund. This one looks stronger than the TLT, or rather TLT is just more volatile. So again, same thing as there's all-time highs up here, but very similar picture, very similar candle to the one that I just showed for TLT. A shooting star, a bearish engulfing, not a very high volume, but there was a lot of selling pressure as well. So maybe we see further selling. Maybe we close even this gap here. This gap needs to be closed. This gap needs to be closed. There's another gap down there. So there's a lot of gaps down here. And yeah, might see some sideways or downward correction because we are overextended to the upside. All-time highs for TLT a few weeks ago. This pattern I kept pointing out, there's a depth of pattern is 3.4%. We came all the way up to it, a little bit even exceeded it, so it now would make sense to take a pause. And for now, we've been taking a pause through time. But I think if Janet Yellen is going to signal further rise in interest rates, maybe we see a correction through price as well. Of course, following Janet Yellen's remarks and also following the GDP report, it looks like the dollar is really liking it, and especially on Friday we had a very large, almost completely mirror image of what TLT looks like. The candle on TLT looks, like almost a mirror image. We have a tail out of the bottom, almost like a bullish it is a bullish engulfing for this pattern for the previous candle from Thursday to Friday, and a lot of pressure to the upside, and the price closed near the top. So it's like a mirror image, and Last week I mentioned that I don't think we'll break below this low, so I guess we haven't broken below this low. This could be, this whole pattern from here and actually all the way here could be like a bull flag, and maybe we'll see a breakout above 97.62 here and continuation higher. This is especially more obvious on the weekly chart. So this is a longer term time frame, and we had a breakout here back in 2014, continuation to 52-week highs, and then we're basically just in a very large long-term correction, almost 2 years consolidation, rather sideways consolidation. And if I'm correct, and I think that this is a bullish consolidation, this could be a double bottom. Maybe we'll see a push higher for the dollar and then a breakout above 100. And then what that means, of course, is that commodities will come under pressure, and I'll show about it later. Specifically, euro really needs to do more of the breaking down for the dollar index to push higher, because euro is a large part of the DXY of the dollar index. So here's euro on the weekly time frame. I showed this chart yesterday. Not really much has changed. I think euro may attempt to retest this highs here, so this area between 1150 and 11711, maybe it will be retesting this area, but I think this is a bearish chart long term, so I think after this big drop, sideways consolidation, and then a continuation lower with a breakdown below these levels makes more sense. Also, the GBP versus US dollar, British pound versus US dollar. Last week I mentioned that this could be a bullish engulfing, and looks like we do have a confirmation of a bullish engulfing on a weekly time frame. And this is really overextended to the downside, so I would not be surprised a British pound at least attempt to get back to $1.38 here. Here's a Japanese yen. Now, last week I said that we may have broken down, maybe we've had a support break. We had a close below this level of 174. In other words, the Japanese yen was strengthening versus the dollar. But maybe not. Maybe this week we have again attempt to, but the Japanese yen to weaken. In other words, the US dollar will strengthen. And so if at the very least the US dollar strengthens versus the yen and possibly the euro, then the the actual dollar index will also strengthen, and then when we get to commodities, that would weigh on commodities. That would mean that commodities will come under pressure. Okay, moving on to commodities. This is gold, continuous contract on a daily time frame. So I pointed out this lower high at the beginning of August, and looks like so far it has been like a warning sign. Looks like we are breaking below at least this minor support here. And this Friday, this is a very nasty looking candle. It really attempted to go, but attempted to push higher, but the bears really came in and just pushed it lower. So the price so far closed, not that it didn't break below Thursday's range, but this candle does not inspire confidence. So at the very least, I'm guessing we're going to be retesting breakouts above 1300 or so. So I think we may see more downside to maybe 1200, possibly lower, possibly even to 1252, or even lower to around 1201 or so. Now this breakout is there's a lot of support around here, so I think if we don't hold support here, there is a very good chance that we're going to find support here, unless, as I said before, we're going to see just an enormous rally in the US dollar, in which case gold will come under pressure, and that makes perfect sense because gold is traded in dollars. In other words, if the dollar is strengthening, the price of gold will come under pressure. Here's the weekly time frame for gold. Breakout here above 1300, and now first retest right there. Now looks like we're headed for a second retest of this breakout, and here's that lower level around 1200 that I showed. So two levels to watch really, 1300 and then 1200. I mean, if we break below 1200, this whole bullish thesis for gold will come into question, and again, that really depends on the dollar. This is gold on a weekly time frame going back 5 years. So this is one of my proprietary indicators, gold breadth index. It attempts to call the just general direction of the market, if it's bullish or bearish. So the bearish direction was established in 2012. So all of these rallies that I have marked with breakout with question mark were basically a short cover and rally, and were opportunities to get short yet again. Now only the final one here in 2016 has succeeded in pushing this index and indicator into the bullish territory, so I think for now gold is bullish. Again, we will see where this goes, but one of the inputs actually turned negative for the gold breadth index, and we have dropped now from 4 to 3, so that's just one of the inputs. So for example, here we had also same picture. We dropped from 4 to 3, and then we dropped to 2, and then we dropped to below 1, in other words to 0. So that was beginning of the bear market. We're not even close, we're not even remotely there. So we will see where this goes, and if we continue deteriorating in the internals and the market breadths for the gold market, this index will continue dropping, and then possibly will enter a bear market yet again. For now, I still think the gold is bullish, but I think we are seeing a correction right now. Here's GDX, gold miners ETF. This one is significantly more volatile. So we are seeing downward pressure on prices and a support break right there with a very large candle. First we had a gap below the 50-day moving average and then a very large candle. I think we're not done with correction. I think especially if the gold is under pressure, GDX will surely follow it. As far as support for GDX, well, let's see. It really will depend on gold, so wherever gold stops, GDX will follow, but here's one support level around 24.78, another one, this one is really strong right there at 21.94 because we have a 50-day moving average and this low. So it's possible we're going to correct all the way down to the 200-day moving average. Here I pointed this one out. This is one of my favorite indicators to look at the gold market. This is bullish percent index, and by the way, it's available. Its symbol is BPGDM, $BPGDM, so you can look it up yourself. In July, it was at 100%. In other words, every single stock within GDX was on a point and figure chart buy signal. And I said that this is extremely overextended and I would never be buying up here. So looks like we had it made a marginal higher high, but then corrected. So now we're coming down to earth a little bit, and possibly we're going to stop somewhere, but we don't know exactly where. And the same thing here for GDX. For the weekly time frame, I wanted to just point out that this drop below the level of 4 has happened here during the bull markets, and actually it didn't amount to much, and then GDX didn't really drop until we got a support break right there in 2012, and eventually the internals deteriorated as well. So I wouldn't necessarily still completely panic just yet. Possibly we're just going to see a correction and then a continuation of a uptrend for GDX. Okay, moving on to the commodity, hard commodities. Here is light crude oil, continuous contract on a weekly time frame. So I read a lot of reports that we're having this bullish breakout and this is a bottoming pattern. I don't see it just yet. I will possibly agree if we see a breakout above this highs and the close on a weekly time frame, maybe around 55. So for now, like right now, what I see is a series of lower lows and lower highs. This is so far just the first higher low relative to this low. So unless we break out above this level here, I would be still very cautious for oil. There is just really very little reason for it to go higher, because they keep saying that they're going to attempt to cut production. That means there is a glut of oil. Even the United States producers can probably just outproduce pretty much anybody in the world, and because of the low oil prices, they're cutting production. So I just don't see the reason for it to go higher, unless something completely different happens, like a black swan event of some sort. So for now, I don't see it going higher. I do see it going lower, especially if we turn around and just break this support. This is a West X intermediate. This is a daily time frame. Now for next week, I'm just saying this is one of my predictions for next week. I don't think we will close next Friday. I don't think we will close above this line. What is it? 48.39 or so, 48.40 or so. So I don't think we'll close above this line on next Friday. Okay, this is natural gas. Very nice looking chart. This is a bullish chart now. It used to be somewhat, it used to be clearly bearish here and then indecisive here, and then we had a breakout above $2.50, and next chart I'll show you why this was an important area. Breakout, 52-week highs, and then pullback. So now this pullback is just, very strong, very powerful bounce off major support, which makes perfect sense because that's just how securities behave. Here is a weekly time frame. It's it's a little more obvious here. We had a breakout above this major resistance level of $2.50, and I showed this on numerous occasions. The reason why it's major is because there was a lot of things happening there. Multiple touches, support break, another touch, and then breakout. Now we had a retest of this breakout, and looks like so far it has been successful. So it looks like we are going to be challenging the 52-week highs, because we're very close to 52-week highs. In fact, on Friday we came within 3 cents to the 52-week highs. Okay, and finally I wanted to point out one more thing, and this is XLE, Energy Select Sector ETF. Now I read some commentators that they think now XLE has broken out and now they're, it is in a bull market. First of all, this is XLE unadjusted. In other words, I took out the dividends for this this particular chart. So here we have series of lower lows and lower highs, and so far I don't see a higher high. So far I see it kind of stolen at resistance, even not even at resistance, because the resistance is slightly higher. So I just don't see this chart being bullish just yet. Maybe we get a breakout here, a consolidation, another breakout, then maybe we'll challenge these highs here. but as of right now I just don't see it, and this is unadjusted. So what happens if I put in the dividends and see if it makes any difference? Okay, and here's XLE adjusted for dividends, or rather, with dividends in it. Not much has changed really. I think this is a weekly close. So we had a close at 70.41 here, and this close was at, let me see, at what was it? So I think that's the reason, is because people are saying that now we have a bullish breakout, is because this close last Friday, not this Friday, last Friday, was above this level with dividends added into them. But as many commentators will tell you, this resistance and support are not hard lines. They are kind of areas of resistance and support, especially for an ETF, which has many stocks in them, in the security. So to me, this looks like we're smack in the middle of a resistance area, and we also have this downslope and resistance line. So if we get a breakout, maybe we'll get a breakout, and then possibly we'll see if this leads anywhere. But for now, I still, even with dividends in it, I still see a downward move in security at resistance. So if anything, you know what that means: a downward, a bearish security at resistance while overbought. If you don't know what it means, sign up today at MasterChartsTrading.com and find out. Thanks very much for listening, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling, and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.